is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Look at our man, Jim from Minneapolis. We are taken by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your words. Seek to know the truth. When you hear an opinion and believe it, you make an agreement. It becomes part of your belief system. The only thing that can break this agreement is to make a new one based on truth. Only the truth has the power to set you free. Market rise. Let's take a look at it out here. We have the Dow Industrials up 203, NASDAQ up 5, S&P's up 12, gold contract up $23, traded at $17.40 an ounce. We got silver up 50 cents, $16.18 an ounce. Light sweet crude up $2.10, $27.39 a barrel. Notes and bonds. You get the 10-year right now up 5 ticks, trading 139.12. The 30-year up 26 at 181.15. And King Dollar's up 230 ticks, trading 100.473. The euro is out here at 107. The yen is at 107.27, and the British pound is at 121 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Well, you're going to have quite a spread in price out here today, folks. You had the S&P 500 get down to a low of 2760. We're at 28.29 right now, and we take a look at this intraday. What you're going to see is going for the intraday high that was established out here this morning. That intraday high was established out here at 28.33, and that was established at 1:30 this afternoon. Now, where we're at right now, the last time that we came up here, it just couldn't handle price. And what you're going into is the downdraft of yesterday at 11 in the morning. NDX 100. We go take a look at the NDX. What do you have with the NDX 100? NDX 100, same type of setup. Now, what the NDX just did, the NDX got over the highs of this morning. You're still coming into the highs that were generated out here, not this morning. No, that was at 1:30. The highs of the NDX are up here at 6 o'clock. 6 o'clock this morning. Bottom line is that I'm going to go back over to the S&P and show you something. So, this is going to be a wild 60 minutes, folks, because what we have is this. When you have a market like we have, meaning that you did a monster retracement off this bottom on the S&P, we get up to the aspect of the SPY 294. You come off the 294 and you come off with monster volume on the way down, and now you're trying to get a rejection of lower price. What tends to happen, and this is going to be really cool, and that's why I was saying these last 60 minutes are going to be so crucial, is you really haven't moved anywhere. Most of the time what ends up happening is that traders are looking to buy the dip. They're looking for a rejection of price. You're looking for all of that. That being said, as I said at the beginning of the program, I expect the NASDAQ futures to be in the red, as well as the S&P futures. Dow Industrial now is a whole different animal, and let me show you why. The Dow Industrials, we picked this up this morning on the morning program. And so what it is this. The Dow Industrials are coming into the strength, and this is a breakout area in the S&P as well as the NASDAQ. The differential is that the Dow has been so weak that the Dow couldn't make it up to higher price. Now, that being said, you pull back into this area. The area that we're talking about is the day of April 7th. The low of that is 22,634. Well, we got down to 22,789, and this is where the equation comes in. You go back to this day, and the amount of volume on that day was a monster, folks, okay? You had volume out here of 1.5 billion shares. So when you come down into a breakout area like that, it's very unusual that you can break that breakout area. In fact, that's a normal correction in a market that still can go higher. You broke topside. You had the volume as you broke topside. In fact, that week of April 6th to April 9th had the highest volume in the markets on the bounce. So the Dow got down there. Now let's go take a look at the S&P. The S&P and the NASDAQ is not even close to that. The number on the S&P that I expect we're going to get down to, the cash S&P, is 2657 to 2757. So that's $100. Well, let's just, in general, just let's say it's 2700. Cut it in half. Well, we got down to a price point out here of 2766. Now, what it did, and it broke it with volume, is that you broke the swing point on the 4th with volume. You're going into the swing point from the 21st. So if we go back over to I'll do it this way. You go back over to the 21st, and you see how you're barreling into this. You're barreling into that swing point with 93 million shares right now versus 126 million. Yesterday, we did 144 million. We're pushing into that swing with volume. So what I expect we're going to see here is that the volatility is still going to stay high, and I do expect that to get into the red. Now, if it does get into the red, it's going to be a major problem, because realistically what should happen here when you get a rejection, even in one of the indices, the bottom line is that you should be able to follow through. The bulls should be able to follow through here. We're coming into option expiration tomorrow. It's going to be a fun hour. That's the bottom line. Gold contract out here. You get a big move in gold. Bottom line is that you get gold up $23, 204,000 contracts. You get price as well as volume behind the move. This is going after the high that was generated out here, last high, which is on the 14th of April. That high is 1788. Bottom line, gold is in an ABC structure on the way up. You get a price projection of 1821 to 1825. We're going to take a look at the note and bond market, and what you're going to see out here inside the 10-year right now trading sideways. You get light volume. The 10-year got up to a price point today of 139.16. You're off it a little. Bottom line, it just doesn't have the juice to break this high out here, which is 139.22. If we take a look at the interest rate structure, we are at 0.62 of 1% right now. The amazing part about it, if you remember even a couple months ago, how much I'd be going through these rates on a continual basis, because the fact of the matter is they were coming down from 2.5%. Once they got into this 0%, 0.5%, guess what? Not much movement. Dow Industrials are up 217. NASDAQ is up 7. S&Ps are up 13. Stay right there, folks. Come back around, man. Mr. Jason Path. We are going to be talking markets.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro-US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now up 218, Nasdaq's up 4, S&Ps are up 12.5. Let's go over to our man, Mr. Jason Path, as we do every Tuesday and Thursday at 1:15. Jason, what's going on, brother?
Tom, it's a exciting market today, man.
It definitely is. And, you not only gave me some great notes, man, but we got some great charts out here today, too. So,
absolutely, yeah. So
talk to me about these charts. The first one I got up on your PowerPoint here is sentiment is terrible.
Absolutely. We've talked a lot about the health impacts and the shutdown, and we all understand that. NFIB and some others are starting to release some data. At this point, over half of small business owners in the country expect to be closed within the next month. I mean, just an astounding statistic. 15% have less than a month of cash on hand. 35% expect to be closed in 1 to 2 months. You put those together, you're starting to get over 50% expect to be closed in the next 60 days.
That's pretty intense, man.
Not all of them are right, but guess what? Some folks who expect to stay open are probably wrong about that too.
Yeah.
You talk about 50% of the small businesses in this country on the brink.
That's amazing. And what just happened here, folks, is that you may not know this yet, but what happened is that Open Table just come out, Jason, and said that their data is showing that 1 out of 4 restaurants aren't even going to open up again.
Ever.
Yeah.
Just gone.
Right now.
That's right. And we've talked a lot about commercial in the last few weeks. I just want to reiterate the point. The way a lot of your commercial leases, which, by the way, a lot of us, in our retirements have REITs, and, REITs are a rather large part of the underlying financial system. The way a lot of those leases are written is a percentage of sales.
Yeah,
part of your rent.
Right.
It's not just a check, right? So,
right.
Cheesecake Factory doesn't come back to a mall. That's a significant, that lost revenue is significant, in addition to the vacancy. So to your point, a quarter just gone. I think more folks haven't made that decision yet that may get there, right? I mean, I think it'll be more than that when we get to it. And that type of carnage in the economy, it's hard to price, but, I think the idea of a V-shaped recovery is gone, at least in my mind. And for some folks who were touting that 30 days ago, I don't hear that talk as much anymore, right?
Well, it's amazing. When you're in business, it is a lot easier, I think, to comprehend that you can see a lot of businesses not coming back, because what happens, folks, is that, you have cycles in businesses. I mean, and you got to make sure you have plenty of cash for those cycles, is when you're going down the bottom versus up the top. And you can even have strong businesses that just don't have enough cash, like for 4 or 5 months. I mean, that's normal, right? I mean, it just depends on how high your overhead is. So it's sad, man. I mean, but it's real. It's, where you're going to get the money. And then I guess the question, Jason, is you can get the money, but do you really want to put that money in the business again, or turn around and say, okay, listen, I'm a smart woman, a smart guy. I can get a new business in this era of how we're going to be dealing with things for a while, That's
right. I mean, you've got a situation where folks are, the term I use, the term others use is a zombie business, where you're propping it up with cheap borrowed money. But what's on the other side?
Exactly.
And you've got, again, some folks in that category now. Some folks are opting out. Some folks are trying to keep that going. But to your point, the market doesn't clear like it should. And it seems to prolong things. One of the charts I sent, some of the data I'm looking at is, if you look at bankruptcies right now, are not where you'd expect them to be, just all things considered. We're not as far along in bankruptcies.
So I have this chart up here right now, bankrupty. So
two ways to look at this, right? You could say, hey, they're up, right? But we would expect them to be up more.
Yes.
We're looking at Chinese data too, just to compare. So bankruptcies are up, but not maybe as bad as you want. But when you look at search data, like on the right, that light blue line,
okay,
it's just going through the roof, right? I think we're early in the wave of bankruptcies that are coming.
Yeah.
I think it's going to be unprecedented. You can see that Google search data, if anybody wanted to question the efficacy of it, it mirrors this. If you go back to 08, 09, 010,
yes,
it mirrors the pattern of bankruptcies almost perfectly, right? And so when you look at the intensity of bankruptcies tripling, that search volume points to 2.5x over the coming few months as we proceed through this year. What we've felt right now in the economy is consumers been hit, folks are out of a job, but that cascading effect of bankruptcy spiking 2.5x in a 60-day window. And we're talking about, I was on the phone with somebody earlier, a large trucking company, right? A large brand name trucking company
yes,
is planning to file tomorrow, Monday. It's a name that would blow you away. And, just not something you think about, because we're talking restaurants, movie theaters and stuff. But these folks are like, we've got a ton of debt. They deal to clothing stores and all
sure,
kinds of other places that are just shut down. Half their business is gone.
And when you're looking at this,
can't sustain.
Yeah, when you're looking at this chart, folks, okay, so remember, Tiger TV, you get everything right with it, videos and everything. And on the right-hand side, folks, you're going to see that blue line. What Jason's talking about, this is the search before the fact that these companies are going bankrupt. They're looking for lawyers, they're looking for accountants, they're looking for the best that they can probably find, so they can, hope to get the best bankruptcy that's out there versus what has already happened. That's a wild shot, man. Holy cow.
Yeah, I mean, the storm is coming. Would be how I'd summarize it. We've all talked about the divergence in the market.
Yes.
And, I don't see it in terms of the market being resilient or robust to what we're about to see.
Totally.
I think people ask me now, is it as bad as I think? And my answer is no, it's worse.
Right. Okay, can we
when you're talking about?
Can we go back to that first chart again? This is the NFIB, okay? Because this is a big number. So when we're looking at this chart, if you can just, I see. So this means
under current economic conditions,
okay,
over the next 60 days, more than half of business owners expect to close.
Oof.
Right. And folks, we're talking about, we're just going to flip a switch and open back up and V-shaped recovery. I mean, nothing points to that. To your point on the open table data, we can look at mobility data. Movie theaters still haven't sold a single ticket. And the problem is with the smart people that I talk to, we're talking about when you open, maybe you just start bleeding more cash. At least while you're closed, you're not bleeding cash, because you have to pay to staff it. Where I live in DC Metro, they're talking about like takeout retail and stuff, and people are like, I'm going to be paying people, to staff a store that does 10% of the sales they used to. That sounds worse than just remaining closed, taking low interest government money and trying to ride it out for 30 more days.
I can tell you in St. Pete, we're downtown St. Pete, and I can tell you absolutely a couple high-end restaurants have not opened yet. They're still doing, they're doing a 4 to 8 pickup, okay? And I understand that, because then you're just talking, a couple cooks, a couple people there, versus these places are big places and they have 40, 50 people in them. It's like, hey, man, that overhead is going to kill you. You know what I mean? So
That's right.
I think they're sitting there waiting. And what's intriguing about it, Jason and folks, is that these couple of restaurants that I'm talking about have money. I mean, I know the owner. They have plenty of money.
That's right.
But they're saying, hey, man, hold it. If I open this, then the amount of expense ratio is monster, man. It's huge, you know?
That's right.
Pretty
That's
wild,
right.
man.
Yeah, and then we talk about sentiment, not to switch topics too dramatically here, but, there's things that folks just aren't even thinking about, right? Like, we have probably the most contentious election any of us will live through over the next several months. The uncertainty and the hit to markets that'll come from the election. I mean, the chairman of the Senate Intel Committee resigned today, right? Nobody's talking about it because of the virus.
Right.
It'll be a hit to markets just from the political uncertainty and other things going on in the macro environment.
Unreal. Listen, you have a great weekend, safe weekend. Look forward to speaking to you next Tuesday.
Can't wait, man.
Thank
Enjoy
you.
it.
Stay right there, folks. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrial's up 317. Nasdaq is up 40. S&Ps are up 25. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday. And don't forget, folks, Basil does an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Very easy to get the opening call, folks. You come over to our website at TFNN. You're going to hit newsletters. You hit the opening call. You hit subscribe. You can get the opening call for 1 month for $128. You can get it for $595, which is a savings of $173 or 22%. You can get that for a year for $995, which is a savings of $541 or 35%. They all come with a 30-day money-back guarantee. When you get Basil's newsletter, folks, he's done a huge amount of workshops. Those workshops are archived right on the site. You get a great education for a minimal monthly fee. Basil Chapman, what's going on?
Hi, Tom. How are you doing there?
I'm doing great, man. Yourself?
Very good. Thank you. And, wow, after listening to Jason, those statistics are stunning, aren't they?
Yeah, they are. Jason, folks, you'll hear him every Tuesday and Thursday. His data is phenomenal, man. I mean, this is real data that's searching. And that bankruptcy data, we all know how this goes. If you're worried about something, you start clicking, and that's what you were seeing there on that data. And, you know, the unfortunate part, Basil, is that a lot of this makes common sense, you know, which is really a drag. You know what I mean? It's like,
right.
Yeah, I mean, who's kidding who? This is you stop cash flow, and it's pretty intense, man. Yeah.
And it's not the shutting off, it's how do you get back, and that's really the issue. And if you're looking at the market, we're talking about a tale of two cities here.
Yes.
You've got the market, which in a sense is a look-forward instrument, not necessarily ignoring, because if you look at certain sectors, you can see what's going on. I mean, we're talking about hotels, you know, anything to do with entertainment. But if you look at the real economy, I couldn't even tell you how many younger people, I say younger people meaning in their 30s and 40s, who are talking about working from home. They haven't necessarily stopped working. It's a different medium. So this is a transition period. And my biggest concern about that is you've got all these people working they say from home, but let's call it from outside the main office. There is no, hardly any place will have a main office if it continues like this. So it makes the cyber attack really potent because you've got, I mean, let's face it, I mean, you don't have the same kind of security, even if it's through the company. There are ways that, you know, things can. So that part of it is something I'm looking at in one way. So that has to do with the cyber security stocks, that sort of thing. The other thing is, within the context of the Dow is about 3 years ago, I say to you, I think the Dow, first of all, it's not the Dow Industrials anymore. It's really the Dow 30. That's all. Because I used to trade a vehicle called the XMI, which is the major market index. And it wasn't really the index that you trade. You traded options on the index. And that was a really nice mix. Well, the Dow has now got that mix. It's not an industrial, it has Microsoft. Well, I suppose in a way you can call it an electronic industrial. You know, it's part of that whole medium.
No, it's you know, yeah.
So it's a very different vehicle. You know, Intel, but you've got Johnson & Johnson. So I like it because it's a fabulous mix. So for subscribers, I probably have made a daily call on the Dow for 30, maybe more years, every day. So I followed closely, but the same, whatever we're looking at, if the Dow's going to go up sharply, you'll probably have the other indexes go up sharply, and the same thing on the downside. So this has been our vehicle for a little while, and we were lucky. We've got along the day of the low, the 23rd of March, through options, and we rolled them over to later months. So it's still there. But we also went along the DIA, which is the Dow Industrial. This is a trading vehicle, the S&P Dow DIA. So at 210, and it's trading right now, I think it's at 233, 235.
Yeah.
So it's still very nice. It did it, of course, much higher prices. But this is really what I'm looking at. There's a pattern that I discussed with you, and one of the reasons why I was becoming very, very cautious, and we've been raising cash actually over the last few weeks, is that there's this pattern that I'm looking at. You see the green line in the daily chart on the left is the daily, in the middle is the weekly, and the monthly is on the right. So that's got a trend line, and the trend line means that I've chosen particular bars. This is from the gap down, and I've chosen the highs, and I try to see that I get at least 2 to 3, and it really clicks right there. There's a technique that I call the Chapman Wave inside track. So underneath this green line, I didn't want to make it messy, but there's an imaginary 1/8 of an inch away, there's a little trend line, and that's the repellent zone. And then on the bottom, I've got the rising trend line, and I've got that in red because when it breaks under it, that's not such a good sign. And I've got, say, the inside track propellant, and it was working beautifully. And then we made the top in the Dow, 24,660 on the 29th of April. Then there was a sharp pullback under the black line, the 14-period moving average. And what I said to subscribers, as it was about to happen, I said, what we're looking at is a pattern that I've looked at for years. I don't know what to call it. I've got it in my mind. I'm thinking Statue of Liberty. I've got all these visions of some pattern. But really what it is, it's the rising, narrowing trend line comes to an apex, and then the major support line breaks, and then it forms a cup formation. And a little mini cup formation says either you're going to break out to a new recovery high or whatever the high is on the left side, usually after a peak D, E, or F, that's the fourth, fifth, or sixth high. And then you come down, so you go to the line, just above the line, or you fail under the line. And then if it's sharply above, that's very positive. But if it stalls there, and there was a trend line coming down, there's this dashed line that I showed, it stalled right at that line, made a little doji candle, and then it started on its way down. So now what's happened is it's taken out. What happens with this cup formation, if it takes out that cup low, you very often get an extension, a one-to-one extension to the downside. So we've pretty much done that. We've had a 2,000-point decline to the 22,789 level. And this rally was very important because what it's showing is instead of the day opened very ugly, it actually opened not bad, and then it just got uglier and uglier, but it all happened very quickly. And what happened was we made a very nice turnaround. I needed to see that turnaround. I needed to see us go positive, and I just want to see a close plus 80 in the Dow, plus 120, somewhere around there. That'll be a good sign because it says, yes, there is still buying, and what my intention here was to say to subscribers, let's raise some cash, and we're looking at a sideways digestive move, but we're going to make it real clear. A close in May, that's any time in May, a close under the 22,200 to 22,000 support level says, be careful, this can go deeper and longer. So far, we're in what I call a sell mode, and that says the pattern that I was looking at was an inverted dreaded H pattern. We went right to the top, made a little cup formation, and now we're coming down. So it's upside down, dreaded H, and we've broken the support level on the left side. So that means you've got to be very careful, but I don't yet have a sign of just a major turn down. I've got the signs that this is weakening, but I also, you can see there are signs of strength, and that's what I was saying about the tale of two cities. There's this thing sitting out there. I don't know how the market is going to be able to ignore all these fundamental issues.
Yeah.
So that says to me, be careful here. But if we're able through the Fed or whatever to support, that's going to be a good sign, at least for the near term.
And folks, you want to ride that wave? It's real easy. Come over to our website at TFNN, hit that newsletter page, hit the opening call, and ride that wave every day. Baz, you have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thanks, man. Stay right there, folks. Come right back.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's up 245, Nasdaq's up 16, S&Ps are up 16.5, and Richard Burr, folks, the Republican senator, he has resigned as chairman of the Senate Intelligence Committee. So this is a big number, man. We were talking about this when this was happening. It blows my mind that the amount of greed that comes down the pike with folks that have like great positions, man, and they just blow it. In this case, we'll see how this thing shakes out, but this is a quote from Mitch McConnell. Senator Byrd contacted me this morning to inform me of his decision to step down as chairman of the Senate Intelligence Committee pending the investigation. What happened, Burr, a North Carolina Republican, were among senators who sold holdings this year around the time that the intelligence officials were delivering closed-door briefings about the emerging threat of the coronavirus. Burr has denied all the wrongdoing. The LA Times quoted unnamed sources that last night you had FBI agents acting on a search warrant, took Burr's phone from his home. Let me tell you something, folks. You're not going to get a search warrant on a senator's home real easy, particularly in the type of political theater that we're in right now, and between the Justice Department and the FBI. Okay, but bottom line is that they got it, and they basically took his phone. And then we'll go from there. Now, there's more. I suspect we'll see whether this is going to be the last senator to basically go south, because what you had out here also here, let's see, okay, you had Senator Kelly Loeffler. She's a Georgian Republican. So Burr sold from like 700,000 to 1.5 million. That's the range that they showed so far. Loeffler, though, was a lot more. And Loeffler, I believe she's married to the head of the New York Stock Exchange. She's denied any wrongdoing, saying she only learned about the stock sales made by her financial advisor after the fact. Then you have Dianne Feinstein of California, Democrat, who is... let's see. She's in the Intelligence Committee also. She did it. They must be moving quick. She said she did answer questions always about her husband's stock transfers, transactions rather. They sold also. Senator James Inhofe, a Republican from Oklahoma, also sold stock after the briefings, according to financial records. Burr sold 33 stocks February 13th. and the value is $628,000 to $1.7 million. Now, what had happened is this, folks. In the downdraft of 2008, this wasn't illegal. What came into play is that in 2012, they finally made it illegal for members of Congress and federal officials to trade on non-public information about pending regulatory or legislative decisions. The law also requires members of Congress, the Senate, federal workers to publicly disclose stock transactions within 45 days of making them. So you go from the top of the power all the way down, and we'll see whether you end up in the can. The whole thing is wild. I mean, and in this particular case, there's no doubt it's a big deal, folks, because what was the date again? Okay, so here it is. Well, I'll bring this up. I'm going to bring up February 13th was the day. So let's just go back to February 13th. Oh, this is crazy. So February 13th. Okay, so check this out, folks. This is about as sick as you get. February 13th. The high of the S&P cash is February 19th. At $33.93. The day of the sale, it was at $33.84. So this was a sell at the top of the market. Now, the thing that's amazing out here, so picture this, how someone always knows something. All those days, they were getting briefed. And how many did I just name? I have to find out how many are in the Senate Intelligence Committee, because it's pretty wild. I think we just named 4 people, 3 Republicans, 1 Democrat, as to see, and they were getting that information all the way up at the highs. And then this didn't fall apart. And you can see up at these highs, you had highs that were being generated out there. The volume was tremendously light. And the bottom line is that they sold 5 days before the downdraft that the S&P went from 3,300, and then 5 days later, it was at 3,100. 5 days later, it was at 2,800, and then additional 30 days later, it was down to 2,100. So, let's say 22. So you were at 1,100 S&P points from the highs to the lows. Monster numbers. There's no doubt. There's no doubt about that. Pretty wild, actually. Silver. Let's go take a look at the silver market. So this is really intriguing with what we have happening with silver out here. Silver, hasn't caught a bid in a long period of time. Try to catch a bid. Finally caught a bid, man. And you got a good bid here. We're up 51 cents. You have 49,000 contracts traded. And let's see if we got... Yeah, we don't have an ABC up because you need 58,000. We're at 49. But what you do have, I suspect what you're going to see out here tomorrow is that we are going to go after the swing high of April 14th. The swing high of April 14th is $16.50. And if we get that, if we take this swing high out, okay, check this out. This is going to be pretty wild. This could be a very large ABC on the way up. Your A point out here is 1160. Your B point is 1650. So you're talking approximately $5, which would get you up to the $20 area, which would be a nice setup, because the way that the silver market has been traded, it's been lagging the gold market in a huge way. That would bring the silver market all the way up to the highs out there on February 24th. So you're talking about a big number. If we go over and we take a look at Newmont Mining, which has been leading the gold stocks higher, you got another ABC up, folks. Bottom line, this is operating really sweet. You're taking out the B point today. The B point $66.06. Your A point is 58, so we're dealing with an 8.8 to B. Your C point is 61.83, which gives you $69.83, and that is saying that what we're going to see here is that we're going to see Newmont Mining going after its all-time high. Its all-time high right now is $70.65. Now, if you take a look at this, which is really cool, it is coming up here on monster volume, man. I mean, you got volume behind these moves. 2 months ago, we did 273 million. Last month, you did 179 million. Right now, you're at 67, and we're at we got about probably 10 more trading days into the end of the month. So it looks to me that the bottom line is that you're going to get to that all-time high. and Newmont. A few of the others have actually broken those all-time highs. That is saying that you're going to see physical gold, physical silver continue higher. We get over and take a look at this S&P. The bottom line, it looks like this S&P is going to hold. Right now, we're at up $28, man. I mean, this has been a monster move. It's been an 80-point move from the bottom. 27.60 was out here this morning. You're up $27 right now. You're trading at 28.39. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 345. We get the Nasdaq up 70. S&Ps are up 29. So you're going to be kicking into a Friday, folks. In next week we get Memorial Day. Now next week, folks, is a full week. So bottom line, you're going to be kicking into a full week. It'll slow down a little at the end of the week, but overnight here and tomorrow is going to be really intriguing. The reason being is that what you have out here is that. Now, when you're looking at this chart, folks, okay, we did not trade down at 272. When you're looking at this chart, now this is what's going to get intriguing, and this is going to be on a lot of charting packages out here tonight, is that we never traded down there. So when you look at this, I've always been talking about this April 7th date. It looks like it went to it, but it did not. Okay, this is a bad tick at 272. Our low out here was 276. Let me get this low. This low was 276.37. That was the low. If we take a look at the NDX 100, just I'm going to make sure that it doesn't have a bad tick also. No, it doesn't have a bad tick. So the S&P, the Q's traded down to 215. You're at 221. And in that particular case, bottom line is that, this thing can get up to 222, probably 09 or something. That's how this baby is set up. What you are going to have here on a weekly basis is that the way we're set up right now is that you challenge and this is the NASDAQ, you've challenged the highs of the last week of February, and you'd have to close over 224 to have basically a positive deal. Anything underneath that, what you have out here, bottom line is that you're going to have, on a weekly, you're going to have a failure on price and a failure on volume, okay? So this is going to be not only an intriguing night, it's going to be an intriguing option expiration tomorrow, because what we also had is that Europe didn't hold up. Europe was down 4%, and they only ended up being down 1.6 to 2.75, but the bottom line is that you were down. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Come back and visit us tomorrow morning. Tommy kicks us off 8:30 in the morning. Great show. Look at him, folks.